This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia and Nigel. Morning, guys.
Hi, good morning, Prashant. Good morning, Nigel.
Good morning.
Well, there are a bit of concerns globally, right?
Yeah.
I mean, markets are a little jittery. Crude is under a bit of pressure. Go Air has filed for bankruptcy. So there's so much action this morning. But let's see. I think the SGX Nifty is also a bit on the back foot.
It is. And I think US markets have taken a bit of a step back last night. And I think that's where we begin the day with. You had a knock, no other way to put it. The S&P was down 1.25%. The NASDAQ was down 1% or so. And if you want to ask which is the number one reason for this, it is basically the fact that the regional bank back in the US sold off quite aggressively. I mean, a measure of the US regional banks sold off 5%. The index sold off 5%. That tells you the level of fear. Now, if you're looking for a smoking gun in terms of what happened, is there a new bank in the US which is going under or something of that sort? There's nothing, right? There's no one single trigger or catalyst per se. And it seems to be that it is momentum kind of taking over in that part of the market in the US. Fear begets fear and momentum begets momentum. And that's essentially, I think, what is happening there. There's no real smoking gun. There's no one single catalyst or even a couple after what has happened, of course, with First Republic. Now, volatility in the regional banks raises chances that the Fed, when it announces its decision later today, it'll be more cautious. It won't be... I mean, it lowers the level of or the risk of the Fed being too hawkish, right? Because financial sector turmoil is one of the big priorities that the Fed wants to focus on. I mean, it wants to avoid financial sector turmoil. And if the regional banks go into a bit of a tizzy once again for whatever reason, I mean, the Fed will take note. Risk management comes into one of the top things which will be discussed when the Fed announces decisions. In any case, the consensus is calling for a 25 basis point Fed rate hike. That's later today, and we'll react to it tomorrow morning. But the forward guidance could get impacted based on what is happening here. So, it's bad news, what's happening with the with banks, but you're focusing on the Fed. Perhaps it'll have some moderating influence. Now, technically speaking, there are two important things which have happened last night, and both are significant. The S&P 500 has completed a triple momentum divergence at its highs, which is negative, which is a negative technical indicator. And on the other hand, the CBOE WIX, right, the volatility gauge in the US, that has completed a triple momentum divergence at its lows. No, so the S&P is looking like it's, I mean, at least going by this indicator, and it happens rarely, so it's more weight is put on this. It's for the S&P, this has come through at the highs, and for the WIX, it's come through at the lows. So will the equity index start to correct a little bit, and the WIX, the fear gauge as it is called, start to rise a little bit? I think that remains the big question. More on this a little later. Oil prices are down 5% or so, and for a big importer like India, it is positive. What it does on the risk sentiment side is another thing, but it sold off a full 5%. No oil-related concerns, but it broader macro worries. Now, coming to the market here, the Nifty basically closed off the high point. We started about 90, 100, 110 points higher, held that gain throughout the course of the day. In the last 30, 40 minutes, the market pulled back about 40 points. But in any case, we've closed above the 61.8% retracement of the entire fall. The upper end of the rising channel for the Nifty stands at 18,450. By the way, 18,450 is also where the 78.6% retracement of the entire fall coincides at. So that's the important number to watch on the way up here. On the lower end, I think, which will also perhaps come into focus, that stands at 17,900. That's not 7,900. That is 17,900, which is the level which should not be violated. So that's on the Nifty. For the Bank Nifty, we are just under 2% away from its all-time high. That stands at 44,152. So, I mean, you could put even shorter-term targets, but just 1.7% away. So I think that's the number to watch on the upside. And lower end of the rising channel for the Bank Nifty, the same sort of corresponding level as I put out for the Nifty, stands at 43,200. And that should act as a support and should not be violated if the market is to say, a little supported and has to map out higher levels. I mean, it's a tricky day. There is a fair bit in terms of handoff from Wall Street. SGX is indicating an 80-point lower start. And then later today, we've got the Fed decision, which will be consequential because, I mean, it's a big cue in terms of what the Fed wants to do. The last hike was an uncomfortable kind of, hands tied behind their back, 25 basis point hike. Will we get a similar picture? Will the Fed indicate that, well, it's one and done, 25 and then a long pause? These are imponderables at this point in time. So I think it's a bit of a holding pattern kind of market that we are in for today. And we pick up on all the new information starting tomorrow morning. Sonia.
Oh, absolutely. And along with all of that, there are also ongoing concerns about the banking contagion, right, in the US. And that, I guess, puts some amount of pressure on the US markets as well. So if you look at it, it was not a small fall. The Dow was down over 360 points, S&P 500. In fact, this morning as well, the Hong Kong market is under a lot of pressure, 1.5% lower. We are starting on the back foot. The SGX Nifty is also indicating weakness. The FOMC decision today, Prashant has spoken about that. So there's a 25 basis points rate hike expected. There's also a sharp fall in crude prices globally, and that's an indication perhaps that there are some demand concerns emerging yet again. Crude is now at a 5-week low at about $75 a barrel, so keep an eye out on that. For our own markets, Nifty closed just below that 18,150 mark. So we've covered quite a bit of ground if you look at it in the last 10-15 days. There was, however, a sell figure from the domestic institutions. So FI buying continues. FI has bought almost 2,000 crores in the cash markets, but DII sold about 400 crores or so. As far as domestic cues are concerned, I'm looking at, very good numbers from Tata Steel. Margins came in much higher than what the street was estimating. The EBITDA per ton was quite strong for the domestic business. The net debt has gone down as well, and that's something that the street always likes. So perhaps this entire metal pack could be in focus because of those numbers. And lots of big numbers to track today as well. There's Titan, ABB, MRF, Havels. There's a lot of these aviation companies that will be in focus because Go First has filed for bankruptcy, which means about 9-10% of the domestic supply, now is removed, and it could be beneficial for the likes of Interglobe, etc. We'll talk more about that later. But for now, it looks like the market is going to sort of give up a little bit of ground. But this has been a buy on dips market. So if, traders choose to buy the dips, then that would be interesting.
Well, that's right. Now, today it's going to be a test for that buy on dips that we have been seeing. And it's played out so well over the last many sessions. Now, just one point I wanted to make first before we go on. Yesterday, you had the Nifty that ended higher and the India VIX as well that moved up. Normally, that's a bit of an ominous sign. They move in, in an inverse direction. So they move in different directions normally. But this is a bit of an ominous sign. So just keep an eye out on that. Maybe you'll say that the VIX was too low, so it had to bounce a little bit. But that's one point we take on board. The second factor is yesterday, you had, it was Tuesday, so you had the weekly expiry that played out for the Nifty Financial Services. And that's why you saw that dip in the final 30-40 minutes or so. Now, the global cues are a little bit jittery, and we have a big cue that's coming up later tonight. But the crude oil price fall, and in the last few days, it's fallen from around mid-80s to mid-70s, which is a positive. The bears, though, they are positioned and they believe that the 18,250 odd level will hold out. You'll ask, what are the FIs do, right? They've been buying in cash. Well, yesterday, they went full throttle. They've added more than 20,000 long contracts, and it's been a while since we had an opportunity to say that, actually. And now they're net long on the index. 51% of their positions are on the long side. And this is the first time they're net long all the way since January 24th, 2023. So it's been a while since we have seen FIs get net long on the index. But before we celebrate that, you need to take note of the fact that they also wrote calls yesterday aggressively. And that's after a while as well. They wrote close to around 50,000 call contracts. And that's giving me a sense that at higher levels, it's likely to see some bit of selling or it's likely to be capped. Two strikes I want to pull up for you. 18,200 call. Big open interest surge yesterday. And now that total open interest is at around 1 crore shares. So from all the active contracts, that has the highest open interest. The Nifty Bank as well, yes, you saw 43,500 call. That added a fair bit of open interest. The premium out there came down from around 250 odd. So that 43,750 could be a bit of a hurdle for the Nifty Bank. On the Nifty itself, 18,250, as I said earlier, the bears are positioned to defend that level. First stop loss on the downside will be 18,000 to 18,050 odd. But if you break that level, then you're counting on the 100 DMA holding out, which will be the line in the sand. SGX Nifty is indicating a bit of a pullback. The buy on dips thesis gets tested, but my gut is we see some consolidation. We could see some bit of a downtick before we get past that 18,250 odd mark.
And as Rakesh used to, the late Rakesh journalist used to say, Shivaji nahi banne ka. Right? I was saying, the market is a beautiful thing, right? It throws you ball after ball after ball, and you don't know under obligation to play everything.
Yeah.
So you wait there.
You can sit it out.
Yeah, you just sit it out, and you wait for the perfect pitch, and then you hit it. A clean strike.
And a couple of Sonia's fans are asking, why is Sonia happy when the SGX Nifty is down 80 points? I'll tell you why. Last night, Arsenal beat Chelsea 3-1.
Absolutely.
And still in the race for the EPL title. So let's hope, I'm a diehard.
And beat by a huge margin, right?
Yeah, it feels good after the kind of drubbing that Arsenal got last week from Man City.
Yeah.
So they're still in the race. So that's the reason why Sonia Shenoy is a little happy.
It's not the SGX, guys.
It's not the markets. There's life beyond markets.
Absolutely. Well, let's quickly tell you what's lined up here in the next 30 minutes or so before we go any further. So we have, of course, the global setup in focus, and we have our guest from Standard Chartered Bank this morning who will join in on the setup there. Our research team will bring you CNBC-TV18's list of top 10 stocks of the day. At 8:30, we do a fundamental stock check with Devin Choksi at KR Choksi Securities.
All right, let's also begin with some cues on the market itself, because it's a big day, right? You have the FOMC policy outcome as well. On the equities front, Victor Schwetz of Macquarie says that after 2 months of selling in April, foreign investors tentatively returned to the emerging market ex-China universe with modest net buying of $650 million. Victor says this was also the second month in a row that India benefited from positive net inflows. He says India remains the best secular long-term EM choice, and although he believes that the current outperformance is premature, they are happy to remain invested.
Well, let's get you some money market views. Kunal Sudani of Shriram Bank says the dollar lost momentum after U.S. job openings, labor turnover survey and factory orders data, with the dollar index and the U.S. 10-year Treasury yields falling. He says the Fed policy is due today with 25 basis point hike discounted, and all eyes will be on the press conference by Chair Powell. He says dollar index finds resistance at 102.6 with a good base formation at 100.85. For the dollar INR, Kunal says 81.6 to a dollar acts as a support, while 82.02 to a dollar is a resistance.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a narrow range of 7.09 to 7.13%. With the lack of any fresh triggers, he says the SDL auction supply was in line with the calendar and decent demand was seen in the auction. He says oil continued to trade lower and US Treasury yields, though were volatile, traded in a range of 3.4 to 3.55%, with the FOMC due this week. Going forward, he adds, market will take cues from the FOMC decision due tonight. Non-farm payroll data later in the week and the weekly auction demand at these levels. He expects the 10-year benchmark bond yield to trade in a range of 7.05 to 7.15%.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Tata Steel, Ambuja Cements, Spandana Spurti, Fino Payments Bank, Humans, Indiglobe Aviation. They are stocks that will be reacting to positive news flow, while on the flip side, Central Bank of India, Bank of Baroda, M&M Financial Services and Coforge will be reacting to negative news flow.
Well, so that's basically what we are watching out for and what's coming up on the show.